Hey folks, welcome to the InTheMoneyStocks.com intraday analysis video brought to you by InTheMoneyStocks.com, the creators of proprietary price, pattern, and time methodology. Alright, learn the PPT methodology and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, let's get right into the charts today, folks. On this Monday, December 3rd, 2012, we're seeing the market slightly lower today. Really had a nice gap up this morning. And what you can see about the gap up this morning was that it went right into a master level. Let me zoom out a little bit. So here's the high from this morning, right? The tail right up to the green line. There's a gap fill right here going back to the 7th of November. So that was a major level. That's a level that I've been telling my members here at InTheMoneyStocks.com, those who study the proprietary strategies of price pattern and time PPT methodology, that's really the low end of the upper portions that this market's going to give you. So again, looking at that, we talked about it this morning in the intraday stock chat. That was where this market hit, and that achieves that initial target of where this market would go. Once we've hit that, there is a small chance you could go up to about 144 on the spiders, but the 143 was really the gap fill level that you would expect. This tells us that the market should start to pull back a little. My predictions right now, we're looking at a little bit more influence of the fiscal cliff coming back into the picture. You're looking for a little bit more worry, panic, that vibe, that negative vibe that we saw on the daily chart. If I flip over to the daily chart, remember when we were selling so sharply on the worry of the fiscal cliff? That's the vibe that I think is going to start to return. I don't really think we're going to see that much selling, meaning that it's not like we're going to go back to these lows, but I do think we'll get, towards this 200 MA. And again, notice the 50 MA here got crossed, so we're into resistance there. If you look at other major stocks as well, they are into significant resistance. Look at Google, for instance. Google tagged this morning on the gap up the 50 MA. That's telling me that's going to pull back. It's already started to pull back. Stock was at 705. It's now at 697. That's an $8 pullback. $8 pullback on Google just from this morning alone. If you take a look at other stocks, let's take a look at Chevron. Chevron ran right into this level. It's having a lot of trouble staying above, and that's failing. And again, you have the 200 MA just above, but for the most part, it looks to me like that's running out of steam. Taking a look at IBM. IBM, again, continuing to pull back, and this is a good leading indicator because you can see clearly that IBM broke above and is consolidating here, but hasn't been able to maintain this bullish consolidation. Here was the inside bar, the green wide range bar, and very quickly, really on Friday, you actually broke below that for the first time. So again, anytime you come outside of an inside bar, it tells you that a pattern could have failed, and in this case, with the breakdown today, it is a possibility. Now again, I'm not predicting, and I want to make this clear, I'm not saying that you are going to see massive selling return and the panic return. I think a minimal amount of that will come back in, pulling this market back in. And if we go back to the spiders, what I'm thinking is we pull back right into this area here. So you see you have the 20 MA and the 200 right here. That's what I'm thinking right now that we pull back into. And again, my prediction is that that should happen in about a 1 week to 1.5 week time frame. So you're looking at a pullback possibly down to about the 138 level on the spiders as a low end. There is a chance it'll go a little bit lower, maybe down to this blue line. But again, I'm not predicting that in the short term anyways. I do think that they will arrange something on the fiscal cliff. I just think for the most part that it could just take a few weeks here. The Republicans and Democrats are still so far apart in this analysis and kind of reaching an agreement that I don't predict it happening in the short term, all right? Let me see what else we have here. Looking at the markets, scanning through here. We have Apple trading still up $3, so it's one of the reasons why the markets are still hanging in there. I had overall Apple at least hitting the 200, and it hasn't quite hit that 200 yet at $600. So I do think there's a chance it could do that in the next few days. But again, it's up today. It's stronger in a weaker market, which is giving us the right signal. But I think the majority of the gains at this point are out of Apple. All right, if you're in Apple, you should have an in-the-money stop. You should, again, we bought it down in this range down here when we picked it up. But at this stage of the game, you minimally want an in-the-money stop and maybe even half off the table just to protect yourself, I think, at this point in time. Amazon down $1. Amazon very extended. You have to believe Amazon's going to pull back. There's a little resistance level here, but you could also look at this key level right here. Notice this trend line. You broke above it on Friday's close, but right back to it. I think that's a little pivot. You also have these pivots right over here, which is telling you, so there's a lot of resistance on Amazon right in this area. I actually am short Amazon myself and looking for a good pullback here. I think minimally they're going to get down, at least minimally down to about the 241, 242 level, maybe even a little bit further. But again, short term, I think that just the pullback here to the 241, 242, 50 MA is what you're looking for there. Exxon, Chevron, both down. We rocked it last week, folks. I just want to make this clear. You know, we talk about how the proprietary PPT methodology here gives you an 80 to 90% success rate. All right, just in the last 6 weeks, we've had 8 winners, all right, 1 flat trade, and 1 loser. So it's perfect. So you're basically batting between 80 and 90% success rate. And just think about that. I mean, think about if every 10 trades you make, you're literally winning 8 to 9 out of them. I mean, that's spectacular. And by the way, we're in the money on some of the current ones we have, Apple and a couple of the other ones. That's the beauty of what we do. And so it's really even a better than 80, 90% success rate. But we just keep it conservative and say 80, 90% success rate. I ask you to go to anyone else out there, and even institutions and hedge funds, and ask them if that's what they're batting, and I can guarantee you they're not. So one of the stocks I sold last week, I took money on Chevron. That was an awesome one, folks. So taking money on Chevron made a beautiful profit. It's pulled back since we took the profits. In addition, I also sold Baidu last Thursday right into the 20 MA from buying it all the way down here. That was another awesome profit. So again, the profits just continue to flow here. I have some new opportunities out there that I'm watching. Again, I am short Amazon right now, looking for a little continuation pullback, and just continue to kind of monitor this market. But to me, it looks like we hit the upside target. We're now looking for a little bit of a pullback here, although I don't think it's going to be a steep pullback right now. I think you can get a shallow pullback, and again, profits should be taken on longs, and you should be looking for select small positions on the short side going into this remaining portion of the week. Have a great afternoon, great evening, folks. Come join us here at InTheMoneyStocks.com. Learn the proprietary strategies, the PPT methodology, profit for life, 80 to 90% success rate. Enough said. Take the 7-day free trial. We offer it. You might as well try it. We'll talk to you soon. Take care.